Hey everybody, just wanted to thank you for logging into the webinar today. We're going to get started here in a few minutes, but I've still got a few people trying to get logged in, so just bear with us here for a couple minutes. Just want to make sure that everybody's able to get registered and online with the webinar before we get started. We've got some great information that Matt is going to share with us, so want to make sure that you guys can all take advantage of hearing what he's got to say. So just hold tight for a couple minutes and we'll get going. All right, everybody, I think we're going to get started here in an effort to keep this on time. I know for a lot of you, to include Matt, it's much later in the evening than it is for us here in the Pacific Northwest. So I want to be, respectful of all of your guys' time, but really excited to be here. It's been a minute since we've had a webinar. So for those of you that are new to us, we are going to start having a webinar every single month on a special topic. And we're going to try to do our best to have really high-level guests up here as well to bring value and education to you guys that are out there trying to navigate through the alternative investment world. There's a lot of noise out there, so I always think there's a lot of value in having experts on these webinars, to answer your questions. So a couple things. I want this really interactive. I don't want to get up here and have you just look at slides that I've put together and listen to me talk about it. I want you to hear from the experts in this industry, and I want you guys to ask questions. So there is a chat section, and as we go along, if you feel like there's something that's applicable to what we're talking about at that time, or you just want to make sure that you get your question in there, please do so through the chat section, and Matt and I will do our best to address all of those at least by the end of the presentation. So without further ado, I want to introduce all of you to Matt Calhoun. He is the Director for Equity Institutional Services, which is, I guess, an affiliate, or is it the parent company of Equity Trust? Is that correct, Matt?
So Equity is the parent company. We're a division of Equity Trust Company.
Okay. Just want to get that straight. There's been all these acquisitions and whatnot. But he is the Director for Equity Institutional Services, which is a premier self-directed IRA custodian. He has over 10 years of experience in the financial services and real estate investing world, with 7 of that being in the alternative asset self-directed retirement space. So he's got quite an extensive history in this alternative investment world as well as self-directed space. Matt specializes in educating groups on the ability to use retirement fund accounts to invest into different asset classes, not just stocks and bonds and mutual funds, but to truly diversify your portfolio. So welcome, Matt. Thank you for taking time, probably away from your family, to be here with us.
Thanks for having me. I really appreciate it.
Yeah, Matt and I met several years ago, and I will tell you, he has been a real value add for many of our clients that are trying to navigate through, the noise of setting up a self-directed account, transferring over accounts. So I'm excited to have him here tonight to give you guys kind of just the 101 on, really what a self-directed IRA is. Some of you that I see on here, I recognize names, already have IRA accounts, but I always get a lot of questions about it. So I am going to hand over the screen share to Matt, and Matt has some information that he's going to go over with you guys. Give me 1 second. Anybody that knows me knows that technology is not really my strong suit, so bear with me here.
All right. Yep. Should see the title screen here. So thanks for the kind words and thanks for the introduction, Heather. So we're going to talk mostly about self-directed IRAs, a term most people are probably familiar with if you've been in the alternative space. It's really just what people think of as an IRA. You can invest in alternatives. Like, I can't do this at Charles Schwab Fidelity. I need a self-directed IRA to invest in this deal I'm really interested in. So I'm going to kind of go over what the power of that is, why I believe it, and how, as alluded to, I started off in the financial services world where we mostly think of stocks, bonds, mutual funds, kind of doing financial planning for investors. Through that journey, actually got really interested in buying rental properties myself, and I did kind of got into that world and got into the alternatives, and it just became really hard to recommend a mutual fund and be really excited about telling clients they should invest in this fund when knowing this other world exists for all these other asset classes that aren't just in the public equities market. So kind of merge the two, my knowledge of the traditional financial services world, IRA accounts, retirement accounts, and then this new interest for alternatives and real estate and different asset classes there, and found a good place to kind of do that at the the company I was at before equity actually purchased us and made us institutional services, which I can kind of lead on to. I have my contact information on there, so please feel free to jot that down. Give me a call directly. Every day I'm talking to investors who, have a deal they're really passionate about, want to get in exposure into a different asset class, and just want to know how to do it. What should they be looking for, and just kind of need someone to guide them there. So take that. It's available at the end as well, and I'll give you access to my calendar, anything else as well. So get started kind of about the company. The equity trust company as a whole purchased Midland Trust, which is where I started into this space in 2023. So we still operated as Midland for another year, and then we switched the logo on the company last year. So we are a division that specializes mostly in private equity, private debt, what we call, sponsor-driven investments, real estate syndications, debt funds, just different investments like that. So basically anything other than like our precious metals and crypto department, we can kind of house in our division.
Okay.
Equity Trust as a whole has about 400,000 account holders and 58 billion in assets, with offices Chicago, Cleveland, where I live, Fort Myers, Florida, and our trust company located in South Dakota. Our division was named best for private equity by Forbes Advisors and a few different asset classes we won awards for, but we had that as well. So what I'm going to kind of go over is what an IRA is, when you need to use a custodian, why you'd even want to use retirement accounts for alternatives, and just some things to kind of keep in mind as you're looking at that process. Feel free, like as we kind of mentioned, I know I have a slideshow up, but we kind of make this interactive and definitely have a lot of questions and answers. I can't see the chat on there, so Heather, feel free to interrupt if there's a good spot to
Okay.
answer those live. If not, we'll just leave a lot of time for questions at the end. I can get through this pretty quickly, but I definitely really enjoy the Q&A session, just trying to get into more of the details and real life examples. So where we'll start is, what is a self-directed IRA? You hear the term around, things that's really special. I'm here to tell you it's actually just a really cool marketing term that somebody came up with. There is no self-directed IRA as far as the IRS is concerned. All retirement accounts can hold alternatives. It's just what your custodian chooses to offer to their clients. Schwab and Fidelity could offer alternatives. Their systems just aren't built for it. They make more money selling their stocks, bonds, mutual funds, so they don't really offer very many alternative options. What the industry has taken for self-directed is to mean a custodian who's okay with offering all asset classes that is eligible to be held in a retirement account. In 74, when retirement accounts, IRA accounts were established, the only thing you can't hold in a retirement account, and this is still true today, is life insurance and collectibles. Anything else can be held in a retirement account, and it's just about finding the specialized custodians that will allow you to hold notes, real estate, precious metals in a retirement account.
Yeah, I think.
Mostly what that refers. Yeah.
Oh, go ahead. I'm sorry.
No.
I just was going to say I get a lot of calls about this. So for the people that are on the phone or on the webinar, and I get people that swear their Fidelity account is self-directed. I think it's really good to point that out, because I think there's some misconception with what truly is a self-directed. So I'm glad that you pointed this out, because I think some of the traditional companies out there have caught on to this buzzword, and so they are telling clients, oh, it's self-directed. Well, it's self-directed if you choose something off their platform. So I appreciate that you talked about this, because it comes up like daily.
Yeah. I forget the group off the top of my head, but yeah, so because it technically doesn't mean a certain account type, they've offered it now like, oh, well, you have accounts in this IRA, but you have to open up a self-directed, which is just, it opens up the brokerage options a little bit more, and you get to pick your own stocks versus them picking your portfolio for you. So they mean something different, even though it's named the same thing. What you're really looking for is a custodian that specializes in alternative assets. Um, so some of the investment options, I put a list on here of different investment options. Like I said, technically it's easier to list what you can't invest in than what you can. Um, but what we see typically is real estate, private equity, debt, either through debt funds, lending money to people you know personally, or structuring notes, forex trading. More, I mean, if you want to get creative, I've seen racehorses and different things there, airplanes, a lot of different things that can be held. We tend to see things kind of center around what's listed on that list there, but it's not limited to that. What you really need is a self-directed IRA custodian, like I said, that specializes in alternatives. Each custodian is going to have some of their specialties. One advantage I kind of mentioned of equity is we have these different divisions, and that's just because we want people to stick to their strengths in certain divisions. So equity has 3 different divisions just to make sure we service the clients the best way possible. So advantage of an IRA, like why would you even look to do this? It's a lot easier to just try and set it in there. They pick kind of my target date funds for me, and I can kind of move on. But the top is really just the tax advantages. These tax advantages that you think of a retirement account. So traditional IRA for review is tax deferred. So while everything is happening in that traditional IRA, you're not paying capital gains taxes, you're not paying income tax or anything else while it's being invested in that retirement account. With a traditional IRA, you don't pay a penny in tax until you start removing funds from the retirement account, and you have flexibility on when you want to pull those out. And there's some benefit there. Roth IRA accounts act the same way while you're doing it, so tax deferred while you're investing. The big benefit with Roth is when you pull that money out, it's tax free. So you contribute with after tax dollars. It grows while it's in the tax or in the retirement account, tax deferred, tax free when you pull it out. And most of them fall into those 2 categories. There's more account types, and we'll get into that as well. But you still keep those same tax advantages with the alternative investment as well. So there's other benefits to having that alternative. You keep the tax benefits of the retirement account with the benefits of the alternative investment as well. Investment options, like this is kind of the drum I'll keep beating the whole presentation. It's really about diversity. I've kind of used this example before. I think I was driving to give a presentation similar to this one, and I think it was NVIDIA had like a bad earnings day, and at the time I did 0 shares of NVIDIA. All my stocks went down that day. I'm like, I'm supposed to be diversified all these different stock holdings and mutual funds, and because one company had bad earnings, it like caused all these other stocks that I had to go down as well. So like that isn't true diversity, across if I'm being affected by one stock in the market. Exposure to alternatives allows you to be in different asset classes, some that'll go with the market, some that will act counter to the market. Some is just a passion that you have. If it's real estate, if you just really like the idea of where the market is with debt, that's what we're seeing right now too. People just want to be in that. Startup companies, venture capital, it just gives you exposure to a lot of different investment options that just aren't available to you otherwise. As I said, keep beating the diversification drum. It's the first one on there, but I feel like I hit that one pretty good for now. We'll probably come back to it. Reasons people use their IRAs, job change is a big one. Most of us are going to have an employer retirement plan at some point. We contributed to it years and years. People are changing jobs more, especially like COVID, and now we're kind of seeing more job change as well. You can use those funds now to invest in these alternatives. While you're employed with an employer, you're stuck in whatever options they have for you. As soon as that job change happens, that's a triggering event to move this to a self-directed IRA account and get into some other asset classes to diversify your retirement holdings. Illiquidity, this comes up a lot where people really like the idea of getting into an investment. They just, for whatever reason, don't have the funds to do it out of their personal checking accounts or savings accounts. They like to have that buffer. access to this retirement account gives them ways to get into these investments that they're excited about, with all the other benefits of tax advantages, but it just gives you a way to get into deals. We've heard this on the real estate side a lot. Oh, I'd like to buy that rental property, I just don't have the cash, or I don't have financing. Not realizing most Americans have some of their largest investable assets in a retirement account. So illiquidity outside the retirement account gives you benefits for investing with the retirement account. And then tax mitigation. I mean, as most people know, alternatives come with nice returns, and we're going after bigger returns that we can't get elsewhere. On top of that, you still get the tax benefit. So, as taxes being one of the biggest expenses that come up with people, your net return could be higher in a retirement account than if you did the same investment outside of a retirement account, just with the tax advantages of the IRA that it offers.
Somebody had a quick question about the job change. It's a good time to ask that.
Yeah.
So is there any tax implications for moving that 401k when you do have a job change?
No, in most cases, we're going to keep you in a tax account that's the same. So if you're contributing everything pre-tax, you'd move to a traditional IRA, so that way there's no penalties, no taxes. If you were lucky and had like a Roth 401k, you're contributing after tax, you could just move that to a Roth IRA. Same idea, no penalties, no taxes. This could be a situation where sometimes investors see this as an opportunity to move some of that pre-tax money to Roth or post-tax. So you could, in theory, do a conversion, and that would be taxable. But if your goal is to just not pay any penalties or taxes, that's completely fine. We'll have an account type for you that matches what you're rolling over. So there's definitely ways to completely avoid penalties or taxes on that, and that goes for movement from any retirement account. If it's from IRA to IRA, then same deal, no penalties, no taxes. From a previous employer plan, no penalties, no taxes, because we're just moving it from one retirement account to another.
Okay. Yeah, I just want everybody to be clear about that. You're not taking a distribution from your 401k that you just left your employer from. What Matt is saying is you're simply rolling those accounts over. The benefit is now you get to dictate where you're investing those dollars, and it's a pretty big benefit. You're not at the mercy of the plan organizer that's picking and choosing where your investments are going. So just wanted everybody to be clear about that. It comes up often. Well, I'm going to have to pay taxes if I move it out of my 401k, not as long as you're rolling it over.
Yep, correct. And for better or worse, like I said, I came from the financial services world, so sometimes you'll even hear advisors think that, well, I'm going to go, invest in and lend money from my retirement funds. Like, oh, you can't do that. You're going to pay penalties and taxes. Because it's done within the retirement account, that's fine. You're not going to pay the penalties and taxes. Just sometimes they're cautious about, they think that because it's leaving and not being invested in stocks or mutual funds, you must be taking a distribution. But you're not doing that yet. You're just moving from one retirement account to another. We have the exact same regulatory burdens of Schwab and Fidelity. We're a qualified IRA custodian, and we're just administering the investment from the retirement account the same way you would own Apple stock in your retirement account. Good question.
No, I think that answered it.
Types of accounts that can be used, not limited to this, but this is probably going to cover 80% of people. A lot of people have the employer plan accounts that we see up top, 401k, 403b, 457. So these are popular retirement plans that you'll contribute to while you're employed, but we see pensions, I think of some other 401as and some different ones as well. These would kind of cover all of those. So these are the most common. I'm contributing directly from my paycheck each month, getting a company match type of plan. Individual accounts are ones that you set up on your own outside of an employer, and most of those are going to cover traditional IRAs, Roth IRAs, SEPs, and Simples. Since we're on the top of account types, we can set up HSAs, solo 401ks, traditional and Roth solo 401ks, and a few other different account types as well. So there's more account types than we're just listed. This probably covers 80 to 90% of the account types we see, but there are more account types that can be advantageous depending on your situation. So considerations when using your IRA for alternatives, a little bit different. It's not quite the same as going through and just picking how you want to allocate to, like I said, a couple different mutual funds or picking a stock ticker symbol and purchasing it there. The first two really important. I'll kind of have some story time there on why that's important because we've had some real life examples where people didn't do this and really didn't realize they made some pretty costly mistakes. But you must engage an IRA custodian or administrator. For an IRA account, a custodian similar to equity has to be involved for this account. We do all the tax reporting to the IRS to keep the IRA's integrity. We'll dot I's, cross T's on investment documents and make sure that we're not causing issues with the integrity of the retirement account. But it just has to be under the custody of an IRA custodian. And then same thing, your investment subscription documents. One thing kind of unique to us is we'll pre-fill all your documents for you. So if you're investing into a fund or lending money, we're going to make sure that the IRA is listed correctly. We pre-fill the tax ID. We try to make it as turnkey for investors as we can. The big thing is, for some people, they may do an alternative. This might be their very first time doing an alternative investment. They might not know how to fill out subscription documents. Our team's doing this hundreds of times every day. So we've seen it all before. We can provide some help there and kind of coach you through what that looks like and basically making sure the IRA is listed as the owner to not cause any tax issues. I think the example that comes to mind when I see the first two, I had 6 months ago, a client who I think had an E-Trade account, and he thought he held a private equity fund holding in his E-Trade account, which set off red flags to me immediately because E-Trade was not going to let him hold this private equity holding
Right.
directly in his account. So we started looking through the statement, and what they did is E-Trade coded it as a distribution. He had mentioned that he wanted to send money to this private equity fund. They said, "Okay, great. We'll send out a check out of your account," and they did. It was $500,000 out of his account. He thought it was still in his retirement account, and about 3 months had gone by before he contacted us because the private equity group said, "Hey, you really should talk to to Matt here." And we started looking at it, and unfortunately, he was past. Once money leaves a retirement account, you technically have 60 days to get it back into a retirement account before it becomes taxable.
Oh,
He was
okay.
outside that window by 30 days or more. So it's a taxable distribution. Maybe they should have done a little bit better job of telling him that. I think they just assumed that he wanted money to leave his retirement account. He was over 59 and a half, so he avoided at least the 10% penalty, but he's a high tax bracket. He's going to pay 20+% on this half amount. I mean, his tax
Wow.
bill is going to be 100,000 probably. So it's really important to kind of get your ducks in a row, open up the IRA account, talk to the team around and just make sure it's structured properly. You
Mhm.
can't assume even E-Trade, who's a good company who does things, just was like, oh, well, private equity, and you can't do that. So they just sent the money out.
Oh my
Like I said,
gosh.
help get us involved, make sure it's done correctly. In this case, it was a very costly mistake, and there was nothing we could do at that point. It had just been too long. If it would have been in the first, within the first 60 days, we could have gotten it kind of worked out. We've had situations where it has been in that time frame and got it worked out. This just was one where too much time had passed to unwind what had been
Wow.
done there. Day number three, this, involves a lot of different investment types, but cash flows in and out of the retirement account go through the custodian. Um, we could do a whole another thing on like checkbook control. It's a little bit different, but in most
Yeah.
cases, money going into the account comes in to the IRA. We send money out as the investment provides dividends, rent checks, income payments. Those come back to your IRA account as well. Even if you're a retiree and you do want to take some of that income out, that's fine. It just comes back to us first, and then we can send it to your bank account from there. So we can do the 1099-R reporting or income reporting from that point forward. Lead time, this is kind of giving a little bit extra grace period. Our goal is for a brand new account, if you're a brand new client, we try to shoot for 7 to 10 days from account opening to funding. Depending on the account type, that's sometimes not possible. We're kind of at the mercy of the 401k provider and whatnot. So it can take that 2 to 3 weeks or a little bit longer. But if everything's good and parties are motivated, coming from an IRA account, you can get it done in like 1 week or so. But it is good to at least give yourself 2 or 3 weeks sometimes to get everything set up ahead of time, get money moved over from those other accounts to get funded into your investment.
Yeah, you guys move pretty
And
quick.
then, yeah, we definitely try to. Like I said, there's some situations where it slightly is out of our hands. Once we get money, though, our team needs to process it in a day or two. Like that's just
Yeah.
kind of our rule. Like, once we get money, now getting the money sometimes is a little tough. As you can imagine, other custodians don't like to hand up the money, give away
No.
the money too fast. So every once in a while, they're a little slow to kick their feet, or sometimes we'll get a check mailed to us and whatnot. So once we get it, we can process it really quickly. And a lot of the investment processing can be done simultaneously while the account's being opened, stuff's being moved. We can get the investment documents lined up and everything ready. And that way, once the money gets here, we're ready to go. Five is a good point. So active 401k money, in most cases, by most cases, I mean probably 95% of the time, is going to be off limit or active employer plans. Unless you rolled money from a previous employer into your new employer,
Hmm.
that money is actually still liquid. But if it's money you've contributed to your current employer and their plan, most plans lock it up till either an age limit or until you're no longer employed there.
Okay.
So 59 and a half, 60, 65 are pretty common age restrictions, and they'll start letting you move some money out. Um, you can definitely ask, but in most cases, if you have a current employer plan, you're probably stuck with that employer plan until you're no longer employed there. If you're a business owner, there's some flexibility there, and we can talk and see what possibilities there are. But like I said, for most people, active 401k plans are going to be a little bit off limits.
Okay.
There's a little more comprehensive view of a lot of different asset classes that we see in the IRA accounts. I said, I mean, real estate passive and active. So active being someone who wants to buy a rental property, short-term rental, they're buying land and kind of flipping it as it appreciates. That would be kind of active. Um, Real estate has its own rules and it's probably one of the more complicated asset classes in a retirement account if you're active, but um, it's a good asset class. It's probably a top three asset class we see in retirement accounts. Passive is investing in syndications, real estate funds, different things that way. Private equity can be real estate related, but it tends to see investing in companies. Debt's definitely I mean, I'd say in the last 6 months, debt might be the top of the list. We're seeing a lot of debt investing in retirement accounts and outside retirement accounts. Just seems to be the nature of the market. We've seen it before previously, but I feel like it's come to prominence here lately.
Yeah.
Venture capital, pre-IPO stock, precious metals. You see the commercials all the time about using a retirement account to buy precious metals. Cryptocurrency is new for a lot of us, but we have the systems in place to have a really good crypto holding offer for retirement accounts, futures forex, and the list kind of goes on and on for different
Yeah.
asset classes there. Last slide I have, just really the steps, pretty easy. There's a link to our site there that would take you on. I always think it's a good idea sometimes, especially if you have questions, book a time to speak with me, someone on my team that can really just kind of walk you through what it looks like. Sometimes it takes 5 minutes, but we're there to kind of answer your questions and walk you every step of the way. But it's an online application. You're in about 20 minutes, and then we can submit transfer paperwork to your other IRA custodian for the amount you want to move over. Something I probably haven't mentioned, I kind of glossed over, is you don't have to move over everything. Like when I say true diversification, sometimes people keep the vast majority of their funds at Schwab, but they move over a certain amount to do for alternatives. Completely doable. Same thing with your 401k. You can do a partial rollover when you do it. Some of it wants to go. We have a brokerage option here, but our wheelhouse is really the alternatives. And our team can help process the funds transfer is step two. And then three is just getting your investment documents done depending on the investment type completed correctly and getting the money to where it needs to go from there. So pretty easy 3-step process. I have it up for questions, but I will leave it on my contact info there. One thing I will quickly mention, so I think at the very beginning of the chat, there's a landing page we have for central lending and equity institutional, links to my calendar, my contact info. how to open an account, and there'll be a promo code that we'll provide as well that waives the account setup fee. So normally there's $50 to open up an account, but that fee is waived using the code that I'll type in the chat, and then email me and I can provide to you as well. But it's cover full amount, no spaces.
Well, thank you. I just want to reiterate some points, and I want people to understand how valuable a custodian like you is, because I've heard the horror stories as well, right? The guy that got on a webinar and decided they don't want to pay equity institutional their fees, and he's going to do a checkbook IRA, and then he did a bunch of prohibited transactions, and now he's got this massive tax implication. It's no joke.
Yeah.
My opinion is align yourself with a custodian like Matt's working with, equity institutional that's going to put the guardrails up for you and make sure that your paperwork's titled properly. I think Matt's being pretty modest. They are amazing at helping people set their accounts up. And I think that's probably one of the I don't know if scary is the right word, but people decide that this is what they want to do. They now have access to their 401k, but they're very confused as to what the next step of the process is. I can tell you Matt's personally helped me and my husband. He's helped tons of our clients. It's a matter of having a conversation with Matt. And then if that's what you are deciding that you want to do is move that over, they pretty much do the heavy lifting for you. I mean, there's some information you need to get to Matt and his team, like where your money is and that kind of stuff, and contacting your current 401k provider, but it's pretty simple from there. So I just want Matt to know that, that is just one of the biggest benefits with working with you guys is the assistance that you provide clients, just getting the money moved over there. And then, the second hurdle to get through is, okay, I've decided I want to put my money here. Now, how do I do that? There's a lot of scary forms, and, it's great that you guys offer that service, that you help them provide, or that you help them fill that out. We do as well at Central Lending, but those forms are ever changing. You guys know best what needs to be done. So I just want to give you guys a shout out because it's scary, and it's hard to really navigate through it. People, I think, for the most part, understand the benefit to utilizing these types of dollars in these alternative investments, but it's really the act of how do I get my money there? And then once it is there, how do I get it out there and get it deployed? So thank you for that. We did have a few questions, so I'm going to kind of fire these off. We've got about 23 minutes left, so as long as we're having questions come through, I'm going to keep going if you're okay for time, Matt. This comes up a lot. People that want to deploy capital out of their self-directed IRA and they want to do it through a lending instrument, they're going to lend somebody money. Are there any things that are off limits? For example, if my son comes to me and says, hey, Mom, I want to buy this investment property. Would you lend me the money? Is that something I can do? Kind of maybe high level go over guardrails with lending money.
Yeah. So I'll start on the IRA side of things. So there are what we call prohibited transactions and prohibited parties. And the easiest way to think about it is you can't transact with lineal family members. So grandparents, parents, children, grandchildren. So Heather, for your example, you couldn't lend money to your son to then go buy the rental property. You could lend to your son's friend, sister, brother, cousin. That's completely fine. But up and down the family tree, you're just going to be able to transact with those people. Now, confusing as this might be, you can do deals together. So if your retirement account and your son wanted to go buy a rental property, you could tenants in common do that together. So a little complicated there, and that's kind of why it does help to have those conversations ahead of time. But the easy way to think about it, yeah, no transacting with those immediate family members. As far as what our team looks at, as long as you're outside, or not violating usury laws in the state, no, the terms are fine. It's up to you. It's up between you and the borrower at that point. We have no opinion there. Let's make sure the retirement account is listed correctly. If you have collateral, we just want to know what the collateral is. That way, if your retirement account has to collect, then it has the ability to do so. But yeah, no, we're pretty simple there. It's
Okay.
just really just keeping those prohibited transactions in place or
Yeah,
out of date.
and
Yeah.
you mentioned that debt is very popular right now, and I agree with you. I've been in this space a long time, and right now it seems like what's really sought after is promissory notes, debt, and then debt
Mm-hmm.
funds. I've had this question come up a few times over the years too, is, I will get a husband and wife that will reach out to us and they're interested in purchasing a note that we're selling. And let's say it's $100,000. Not one of them has enough to buy the note just in their IRA. Could they take fractional interest in that note with both of their IRAs? For example, if they each own 50%, as long as the payments were split up, is that acceptable?
Correct. So that can be done. What we would see on our side is the note will list both retirement accounts as basically co-lenders for the full amount. And then when payments come back, it's just split up based on the ownership. So it doesn't have to be 50-50. It's a really
Right.
good, easy example to say they're going to purchase 50-50, but if it's 60-40, 70-30, whatever it comes out to be, we just want the returns to be split based on capital that came in.
Okay.
So that can be done. They can pool their funds together to do an investment together. I'll
Yeah.
complicate
That's
the scenario even more if you really want. We could actually have two retirement accounts, husband and wife, and then if they had some personal funds they needed to make that deal. So if they only had 70,000 in the retirement accounts and they wanted to add 30, they could technically have three lenders on there. It just is structured in the note. So that can be done for sure.
that's good to know. Yeah, I've actually
Yeah.
seen those notes. It's a
Yeah.
servicing nightmare. So if any of our servicing people are on the call, I'm sorry. But
Yeah. Yeah.
most
You said
big
doable. It's doable.
servicing companies can split up payments. The downside is you're all going to get
Mhm.
charged servicing fees, but it's a benefit because if you've got, a small dollar amount sitting in your IRA, instead of waiting till you get enough to go into a particular kind of investment, this is the way that you can get your money deployed right away. So definitely some benefits and, things to look for when you are looking at these alternative investments. Another big one is reinvesting your earnings. I think that's become very popular with IRA holders is where can I find these
Mhm.
alternative investments where the money's not going to go back and just sit in my account? I can keep it out there working. So a lot of times what we're finding is, putting your money in a debt fund that allows for that is pretty useful with your IRA accounts. So, things to think about. Um, Here's the other thing I wanted to, and someone else put this in, was asking if you could expand a little bit more on Roth conversions. Can you maybe
Mhm.
first tell people what the limitations are for opening a Roth IRA so that they can understand why a conversion might be powerful or useful for them?
Yeah. So otherwise, I would probably want to do Roth IRA
Yeah.
just because who wouldn't want tax-free, money that's grown for so many years? But there are income restrictions on being able to contribute new money to a Roth IRA. Roth 401ks don't have it, but it kind of gets limited by your employer contributions or employee
Mm.
contributions. Uh, Off the top of my head, I think Married Filing jointly it's a little over 200,000 in total income, and then you're cut off. You can't contribute to a Roth 401k. It changes each year, so I'm not 100% off the top of my head on the numbers, but it's in that ballpark.
Okay.
So if you make any more money than that, you just can't contribute money into the Roth IRA. So it's referred to a lot of times as backdoor Roth contributions, or there's a lot of different terms that it's done. Another good marketing term, but
Mhm.
people will convert money from their traditional and put it into their Roth. So they'll pay taxes now to get more money into that tax-free bucket um, to hopefully grow it larger and do that. So a lot of times if you have a lower tax year, you didn't make as much income, people will take advantage of that, convert money from pre-tax or traditional IRAs into Roth. So you pay taxes now with obviously the hope that it grows much larger, and when you pull it out retirement, it's tax free.
Gotcha. And so just to clarify, you said you cannot contribute to your Roth after you exceed that income limitation. Does that mean if you have an existing Roth, you still can't contribute to it, or you just can't open a new Roth IRA?
You wouldn't be able to add money from your checking account into the Roth account. Any money you already have in there. So if you were eligible for a long time, contributed, that money still stays in there, it grows. You still have that in there. It's
Okay.
just you can't add more money each year out of your checking account if you don't hit those income thresholds.
Okay. Good to know. Since we're on the kind of the subject of the IRAs, do people have the ability, and this actually somebody put in the chat section that they had multiple IRAs, up to,
Mm-hmm.
I think it was 4. Do they have the ability if they, I'm assuming if they're like IRAs, like traditional versus Roth, could they potentially combine those so that they have one account?
So in most cases, we're going to keep the tax status one separate. So if you have, in this case, 2 traditional and 2 Roths, the easiest thing is to open traditional, move those 2 traditionals into a traditional, move 2 Roth into a Roth. This causes
Okay.
you no tax implications or anything else. They're kept separate because for record keeping,
Yeah.
knowing how many dollars are tax deferred and how many are going to be tax free. So the only way to combine them into one account is to convert to Roth and pay taxes. Otherwise, you'll just invest out of 2 accounts.
Okay. But multiple accounts could hypothetically be combined into one.
Mm-hmm.
Okay, let's see what else we've got here. You talked about how long it takes to move over funds. If somebody was interested in getting with you and starting this, what kind of information should they bring to the meeting with you? As far as like where their money is and that type of stuff, what would be helpful just to prepare for the call?
Yeah, just for the call, a statement's not really required. I don't need to know anything there particularly. Like if you just know what type of account you have, that does help. It helps kind of
Okay.
garner the conversation of what type of account we're going to open. So if you know it's a 401k, we don't even know what's invested in or anything else. So just kind of a general what type of accounts are you looking to move over. That does really help a lot, just so we're not talking. There's so many times where we're like, well, I think it's a traditional, I think it's a Roth. I'm like, then I can't tell you exactly what account to open, but we think it's this, and if we find out later, we can always change it, and just know nothing's set in stone. We can update
Yeah.
things, but that does help the conversation. It also just helps to kind of have at least a general idea of what you want to invest in, just so we can kind of tailor this conversation. One downside of having unlimited investment options is it's sometimes really hard to focus on what you want to invest
Yes.
in. So it does help to kind of at least have even a short list of like, this is what I want to invest in. Because if I want to be active in real estate, it's a very different conversation than I want to go into a debt fund. Very
Yeah.
different conversations. And it kind of helps to just have a direction that we're looking to go.
Yeah, that's a good point. I think people get analysis paralysis. They hear all this noise out there about this, and it's hard to kind of decipher and really focus on what you're trying to do. And I think a big part of really honing in on what's going to be the best option is identifying kind of like what kind of dollars you're investing, personal funds versus IRA
Hmm.
funds. I get people that call me, well, I've got the self-directed IRA and I want cash flow, and they're not at an age where they can even take their money out of their IRA. So those are conversations for you guys
Yeah.
that are on the webinar to be having with yourself before you even start making these calls. Like, what are you trying to accomplish? And most people have multiple buckets, right? They have liquid funds, they've got IRA
Hmm.
funds, sometimes they still have money tied up in a 401k. So, having that conversation with yourself or a spouse or a partner, like, what are we trying to accomplish? Because you might find that some of the alternative investments you're actually looking at won't even help you accomplish what you're wanting to do. So, I've done lots of webinars on that. It's helpful to have an idea
Yeah.
of that for sure. Um, One of the other things that comes up often with IRAs is, and I don't know if you hear this a lot, but I get people that say, okay, well, I'm going to invest in that note or that piece of debt, and then I want my payment sent to me, but I'm going to fund that deal with my, equity institutional account. Talk a little bit about that. You kind of touched on that cash flow kind of needs to flow back and forth, but it comes up mostly with people buying real estate. So if you can just high level speak about that, because I think there is some misconception with that.
Yeah.
You're the expert at that.
Yeah. So we had a slide on it, but yeah, any incoming funds or outgoing funds related to the investment flow through the custodian. It's our responsibility, dictated by our regulators, that we have to keep track of what's going in and out of the account. So that's fine if you do want to take that income out, every month or whatnot. It just has to come here first. It's an extra step But we would get the funds and then we can set it up automatically too. So a lot of times if I know I'm going to take $1,000 out of this account every month, we can set it up so the 15th of every month we send you the payment. So it's fine. It just has to flow through us to still keep the integrity of the account. So not only are we looking at taxable income, but like taking money out directly is technically a prohibited transaction and can jeopardize the retirement account as a whole as well. So you definitely want the incoming cash flow to flow through the custodian just so they can properly
Okay.
report everything.
I think like mostly it's came up in conversations about people trying to buy real estate within their IRA. You know, they're
Hmm.
buying a house to fix and flip, and they're going to provide all the rehab funds personally, and the whole property's titled in their IRA. I mean, I'm probably getting way too far in the weeds, but we are a private lender, so this conversation comes up often. And I tell
Yeah.
people, I refer them to you. I'm like, go talk to the experts. You don't want to do anything that's going to violate, the rules.
We can get creative with the structuring, and yeah, I won't get into too much on this just because I don't want people to take the wrong message away. But there's ways to structure deals that kind of work for that kind of scenario of having some personal and some not. Just know that anything that's due to the retirement account just has to flow back. If you're split on a deal, I think we kind of mentioned it. You could go on. We mentioned the note scenario,
Yeah.
but in that case where you had half or a third of the note was your personally, you're going to get that third portion every single month. The 2/3 goes back to the retirement account, and then we could send it from there.
Gotcha.
So yeah, definitely talk to me. We can talk about deal structuring to accomplish what you want. But yeah, it does come up a lot in real estate. I mean, most of the time, if people are buying a property in the retirement account, it's probably not the first real estate property they've owned. They probably own
Yeah.
ones outside the retirement account, and it's a little tough to know like this one's just different. Like payments don't go to the property manager, they don't go to my bank account. They have to go to the custodian first, and then
Gotcha.
they can go wherever else they need to go. Yeah.
Well, and I think that just kind of circles back on the benefit to working with a custodian like you guys. You know,
Yeah.
they are there to help you guys and guide you and put the guardrails up so you aren't doing anything that's going to jeopardize the integrity of your IRA. I have seen investors over the 23 years I've been in this industry that have used IRAs and created massive wealth by lending it out and investing in alternative investments. So they are very powerful. And if you are lucky enough to have access to your 401k, that's even better, right? Now you can move that money
Mm-hmm.
over, you can start diversifying it in multiple investments. I love that you brought up diversification because I can't tell you how many calls I get and they're like, I've got 500 grand in my IRA and I'm going to put it all with you guys, which hey, that would be great, but that isn't, first of all, I don't give financial advice, but that's not good advice. I would never encourage anybody to put all their eggs in one basket. So please, take Matt's advice. Diversification is the best option. And there's plenty of great operators out there. I know that, Equity Institutional does a lot of webinars. You guys don't necessarily promote operators, but, if you're in this industry, you know the good ones. You've heard the horror stories, and like I try to educate people. These are the things that you should look for. Are they, having their funds audited? Are they providing you with financials? If you are going into a fund environment, if you're buying note, which is really the
Mm-hmm.
debt component of it, Matt's team can help you make sure that everything's documented properly. I've heard horror stories that, hey, I lent this guy money that I met at this investment club, and he never recorded a mortgage, and now he's not paying me, and what do I do? I think that's where, getting advice from you guys is a huge, huge benefit. So I think that's it for questions. Okay, a couple things. Can everybody see, maybe give me a thumbs up if you guys can see that chat with Matt's link to his calendar as well as a referral code that he's been gracious enough to provide us with. I don't know, I want to make sure everybody can see that. Okay, let's see if everybody can see that now. Oh shoot, I think it only shared it with you again. All right, we'll try it one more time. See, Matt's even laughing at me now.
That
Now
one
you
might
know
work.
now you know my secret.
For whatever reason, it's only giving me options to share with you, and that's
Okay,
more
I
like
think I shared it with everybody. Oh, we're good. I got a thumbs up.
perfect. All right.
Okay, well, I want to thank you again. I know that that probably sounds silly, but I'm really genuine about that because I know, one, I know how powerful these accounts are to creating wealth. And secondly, I know what a big service you guys provide. I mean, I'm not going to name any names, but we get clients that call with other custodians that are not as good as you guys. And it's a struggle. I mean, I've had clients want to invest in a note that took over a month to do, and their money was already at their custodian. So I just want to say thank you because you have provided a big service for our clients. For anybody that's on the call or the webinar today, if you are even remotely interested in learning more about possibly setting up a new account, rolling over some accounts, get a hold of Matt. He's your guy. He's going to take great care of you. I am going to share my screen one last time. If any of you need to get a hold of me, there is a link to my calendar that I'm going to put up. It's through a QR code. You are welcome to go to that link. My contact information is up there as well with my email address. So let me know what I can do for you guys. But thanks again, Matt. For any of you interested, we have a in-person investor summit coming up April 9th through the 11th in Lakeland, Florida. Matt is going to be there speaking. We're going to have some other guest speakers as well, talking about everything from why you should invest in funds that are audited up to some self-help stuff. So if you're interested at all in attending our investor summit April 9th through the 11th in Lakeland, it is complimentary. We're going to wine and dine you, and you guys get to see behind the curtains at our corporate office. Let me know, and I can get you more information on that. But thanks again, Matt. I really appreciate you and look forward to seeing you in April.
Thanks again.
All right, take care, everybody.